Good morning. This is Andrew from Trend Following Mentor. What I teach and what I do is I'm a trend follower. I trend follow stocks, commodities, forex. And when you trend follow, basically you can use breakout strategies and you can also use retracement strategies. But that's really not the greater crux. The crux is really reading the market without having your opinions. And also trading in a consistent manner on everything that you do. And today what we're going to talk about is Facebook, which is an interesting trade. But before that, what we always do is we look at what the general market is doing. And for that, let's go to Metastock. And as you can see, the momentum is diminishing. That's not a positive, especially when you're hitting new highs. That's pretty bad, actually. The next issue that I always use is I use a 10 period and a 30 period. If the 10 takes out the 30 period exponential moving average, that's another negative. Combining all of this, where you had another distribution day on the S&Ps, which is also a negative. So what you're doing is you're looking at the basis of facts on a daily basis without an opinion. You might think that the world is beautiful and it's the greatest time to invest in stocks, and maybe it is. But you weigh out all the facts and then you place your bets. And you try to take low risk bets where you try to risk what I suggest is less than 1% of your account size. The other thing to bear in mind, as long as we're talking about the S&P 500, besides the fact we're at all-time highs, we're at all-time highs of margin debt, which is an extreme negative. The other big negative is we're at extreme highs of optimism based on various all types of sentiment readings. So right now, things aren't looking that good on the S&Ps, and it's a sign of caution. And it doesn't mean don't take trades, but it just means be cautious. Be extremely cautious. Let's jump to Facebook. What's very interesting with Facebook is that, let me go back a little bit. You had this massive move. Market was healthy at this time. You could have bought out the gap here. Actually, you had a cup and a handle. You would have bought in here before the gap. If you had missed it, you could have bought on this trend line breakout. Then you went below the 50 period exponential moving average and wasn't able to take it out. And you had all these people that tried to go short Facebook and ended up not doing all that well. Well, what's happening here is now we have a nice cup and you have a buy point. The only problem here, and compare, the volume isn't that strong. It's not overly happening. Look at the volume here. There's a tremendous amount of volume here. And look at the volume here. There was a lot of buyers here on this day. So that's what you always want to look at. You want to look at your volumes. You want to see what's really happening. Get rid of that. But you have a cup. You could have a breakout. You like to see the market kind of shake off some of these distribution days and turn up from the moving averages. I mean, really what could happen is you can have some sell-off here, and then you'd be buying around here, or could be. Again, try not to trade with your opinions. Trade what the market is telling you. Look to buy breakouts and follow trends. Look to buy retracements. This is how to compound your way to wealth over long periods of time. Again, this is Andrew Abraham from Trend Following Mentor. Thank you very much.